Wedbush Securities initiating coverage of the trade desk with an Outperform rating. The firm highlighting top-line growth potential and digital advertising spend is expected to rise in 2024. And here to discuss that call is Scott Devitt, Wedbush Securities Managing Director. Scott, it is always good to see you on the program. So let's get to this call, Scott. So you're a fan of the trade desk. You initiate coverage with an Outperform. Your target, 110. How come, Scott? Walk us through the argument.
Well, the drivers for trade desk really are this transition that's happening in the advertising industry, where connected TV is shifting from linear to streaming TV, and the advertising is following. And the trade desk is a big beneficiary. Almost half of the business is video today. Our expectation is over the next 3 to 5 years, you're going to see an acceleration in the decline of linear TV, which will be a significant tailwind for the business. In addition to that, retail media is becoming an increasing portion of the online advertising industry, and Trade Desk has a quite innovative model where they're pulling in first-party data from retailers to further inform their demand-side platform for advertisers. Both of those drivers, the two most significant drivers for the ad industry, which is what is so interesting about Trade Desk.
Scott, it's zoom out a little bit, because as we talk about the continuing transition from cable TV, traditional TV, the way that advertising works there, and then connected TV and how ads are sold onto those platforms, what's the biggest way that has shifted? And are any of those sort of older players playing a role in this new ecosystem, or is it sort of Trade Desk's, market to take?
Well, Trade Desk is the leading independent demand-side platform. The largest competitors actually are probably Google, Yahoo's still in that business, Microsoft, and Amazon has a growing DSP business as well. But what's happened over the past, 10 to 15 years has been this transition from guessing with advertising to increasingly having real-time programmatic advertising, where advertisers are bidding and content owners are pricing inventory properly and meeting in an online exchange. And that, to us, is going to increase as a proportion of the overall industry going forward. And Trade Desk is the leading provider of that. In addition, these companies that Trade Desk is competing with are companies that are under regulatory scrutiny. So you always have the possibility as well that there could be divestitures that are forced, say with an Alphabet, where the government forces the company to unbundle its ad tech platform, which would be a significant positive for Trade Desk if that ever happened.
And Scott, you look at Trade Desk, stocks enjoyed a nice run. I mean, it's up about 35% already this year, but you must think valuation still attractive here, Scott.
It's high. It's similar to history, but I wouldn't call it a bargain at current prices. The company that I think is probably the most comparable to Trade Desk, interestingly, many don't think of it this way, is Shopify, which provides a similar service on the e-commerce side. And when you look at Trade Desk relative to a Shopify, it's faster growth, it's a significantly higher margin business, and it trades, Shopify trades about a 30% premium. So on a relative basis, relative to the company that we think is probably the closest comparable, it trades at a meaningful discount. On an absolute basis, you can see our target price is only about 12% above the stock. I wouldn't call it a bargain, but this is an emerging blue chip company that you want to own.
And Scott, we're just coming off of Cannes, and a lot of advertising and marketing people gathering there. Was there anything you heard coming out of that conference that also, informs how you're viewing Trade Desk and some of its competitors in terms of how ad dollars are going to be flowing?
A lot of conversations and relationships announced using retail media data, and there was an announcement with Amazon. There was something with Instacart, and so what you're finding is these data repositories of media content are now being brought to life, and that's going to continue to enhance the advertising models as these retail companies, some of which do it directly, like Amazon, providing their own demand-side platform for their retail media inventory to third-party advertisers. And many retailers that don't have the capacity to do that, like Walmart, that are actually partnering with companies like Trade Desk to provide that service for them.
Scott, I know you cover and you like Amazon, Alphabet, and Meta. You got Outperforms, I think, on all three. If I asked you, Scott, though, to pick one, would you give one name there that you think you'd be most bullish on right here at these levels?
Amazon. Amazon stands out. The retail, business is going through this renaissance period post-COVID, where revenue growth is accelerated again and beginning to stabilize at traditional levels. Margins expanding. The online advertising business is approaching 60 billion and growing twice the rate of the overall ad industry online. And the web services business is making a recovery where you're comping some of the reduction in activity from last year. And so AWS throughout the remainder of this year will accelerate as well. So among those four, we like them all, but I would rank Amazon number one.
Scott Devitt, always good to see you. Thanks a lot for taking the time to chat with us.
Thank you.